Hey guys, welcome back to Stacking Stocks, and thanks for tuning in today. We're back with more content on the electric vehicle making behemoth, NIO. Well, sit tight, stay tuned, because it's about to get hot in here. So let's get down to business. NIO reported a loss for the third quarter that was narrower than Wall Street had expected on good sequential and year-over-year sales growth despite a series of manufacturing challenges. On an adjusted basis, excluding share-based compensation, NIO lost $88.4 million in the third quarter, or 6 cents per share on revenue of $1.52 billion. Wall Street analysts polled by Thomson Reuters had expected an adjusted loss of 9 cents per share on revenue of $1.46 billion on average. But the news wasn't all good, as the company warned that ongoing supply chain woes will likely limit its sales growth through the end of the year and into 2022. And that could affect NIO's performance in 2022 if the company doesn't come up with a plan to sort out the supply issues. Now let's quickly highlight NIO's third quarter results. NIO delivered 24,439 vehicles in the third quarter. That's roughly double its year-ago result and up from 21,896 in the second quarter of 2021. But it noted that it delivered just 3,667 vehicles in October as its factory's production lines were being revamped ahead of the introduction of the new ET7 sedan. NIO's vehicle margin, the gross margin from its sales of new vehicles, was 18%, and that was down from 20.3% in the second quarter, but up from 14.5% in the third quarter of 2020. Now, NIO also bought back more of the equity it gave up as a part of the bailout deal with economic development authorities in April of 2020. As part of that deal, NIO agreed to place all of its China assets in a subsidiary called NIO China, in which the authorities received a 24.1% stake in exchange for about $1 billion in cash. NIO's success since the bailout has allowed it to buy back portions of that stake. As of the most recent transaction in September, it now owns 92.114% of NIO China. The company announced an ongoing at-the-market secondary stock offering on September the 7th. Through November 9th, it had raised about $1.2 billion via that offering. NIO had about $7.3 billion in cash and equivalents as of September 30th and about $1.5 billion in long-term debt. Shares of the electric vehicle maker, NIO, have been under pressure since the company reported their third quarter earnings. Considering they had rallied 30% since early October, investors were clearly expecting big things. But the 10% drop since the release tells us they were more than a little disappointed. From a high level, at least, the numbers did look good initially. Revenue was up close to 130% on the year, an impressive feat for any business and well ahead of what analysts had been expecting. However, the devil was definitely in the details, and by the time investors had made their way to the earnings per share figure, it was clear that NIO's shares were only ever going to move in one direction, for the subsequent days at least. Specifically, GAAP EPS was well below the consensus, coming in at minus 28 cents when analysts had been looking for minus 10 cents. So what was the reaction following the earnings report? Despite the miss, NIO CEO still struck a bullish tone with his comments on the earnings call. According to William Bin Lee, founder and chairman as well as CEO, NIO achieved another all-time high quarterly delivery of 24,439 for the third quarter of 2021, representing a solid growth of 100.2% year over year. We've also established that NIO's demand continues to be strong and new orders reached a new record high in October. Despite the continued supply chain volatilities, the company's teams and partners are working closely together to secure the supply and production for the fourth quarter of 2021. Meanwhile, NIO is fully dedicated to accelerating its products and technologies development and bringing the 3 new products based on NIO Technology Platform 2.0 to users in 2022 in order to lead the smart EV transformation and adoption. There are a lot of things going on in the pipeline right now, aren't there? This is all good stuff to hear for investors with a long enough time horizon. The EV market is still in its infancy, and with 130% year-over-year growth in revenue, NIO is clearly doing something right. There's no doubt that near-term headwinds exist in the form of supply chain constraints. But again, that is a supply issue rather than a demand issue, and won't be here forever. CFO Stephen Wei-Fang alluded to management's longer-term focus when he noted that NIO is broadening its user base and entering global new markets. NIO is determined to further expand its sales and service network and expedite the swapping and charging infrastructure deployment to better reach and serve more users worldwide. Well, it looks like consumers and investors should be able to expect great things from NIO. However, despite all this positivity and momentum, there's no doubt that NIO shares have been underperforming their peer group this year. They're currently down 25% on the year, while the likes of Tesla are up 50%. But perhaps this is where the opportunity lies. The folks over at Deutsche Bank were out with their bullish call, calling NIO stock a catalyst call buy idea on the basis of this underperformance. There's more on the pipeline. Deutsche analyst Edison Yu noted that while NIO shares have materially underperformed against their peer group, they have more than enough catalysts on the horizon to jumpstart a potential catch-up move. One of these was the company's third quarter earnings, which, as we have seen, were disappointing for the near term, but hold a lot of promise for the longer term. Fresh monthly delivery numbers should add some fuel to the fire, as should the company's investor day this December, where new products and tech are due to be unveiled. Indeed, this impression that NIO is a bit of a sleeping giant was one shared by the folks over at Goldman Sachs. In October, they upped their rating on the stock from a neutral to a buy. They also gave NIO shares a fresh price target of $56, which, after the recent dip, suggests there's an upside in the region of 40% to be had from current levels. This move by Goldman was driven in a large part by the way NIO has been positioning their ET7 model in the same class as the Mercedes S-Class and the BMW 7 Series. Goldman also pointed to December's upcoming NIO Day as a favorable catalyst for investors to look forward to. What that means for those on the sidelines is that NIO's longer-term potential still holds true, and these near-term headwinds are affording investors a potentially excellent entry opportunity. Now, what do you think about this? In the fourth quarter, NIO expects to deliver 23,500 to 25,500 electric vehicles. That's up 35.4% to 46.9% year over year. But quarter over quarter, that would represent a decrease of 3.8% to an increase of 4.3%. It now expects fourth quarter revenue at about $1.455 billion to $1.568 billion. Before the results, Wall Street was expecting fourth quarter revenue of $1.736 billion. Analysts now expect fourth quarter revenue of $1.57 billion. This is also based on the fact that NIO is planning for 3 new EVs in 2022, including the upscale ET7, its first electric sedan and most high-tech vehicle yet. The hot Chinese startup already makes 3 premium electric SUVs, the ES8, the ES6, and the EC6. At NIO Day on December 18th, unconfirmed reports suggest Tesla's emerging rival could show off a cheaper entry-level ET5 electric sedan. It could also reveal a new mass-market brand. In the third quarter, NIO began selling in Norway, its first international market outside of China. Now, Volkswagen and Tesla are major buyers in that large and highly competitive market already. China car and battery giant BYD also sells electric vehicles there, and so does startup peer Xpeng. Well, that makes it a really big deal for NIO lovers. Since developing its first car in 2016, the Chinese automaker has steadily ramped up production, though it still doesn't crack the top 15 in terms of EV market share. But we still think NIO has got what it takes to dominate the EV sector. We'll just have to wait and see. Now, remember to leave a comment in the comments section. Don't forget to like, share, and subscribe. And we'll see you next time right here on Stacking Stocks.